You're going to group these strategies, as I understand it, so that people can really follow along and not get lost, not get into the weeds.
Okay, so starting with savings, the first strategy is to maximize your contributions to your 401k, right? Automatically, that can help lower your adjusted gross income. The second strategy is similar, which would be to invest in a deductible IRA if your income is eligible. And this may mean for your spouse as well. So think about, making those retirement contributions. The next strategy would be, if you're already doing those, or you're already maximizing in your 401k, or your income is too high for making a deductible IRA contribution, now think about consider investing in a Roth IRA. Or if your employer is offering it, maybe a Roth 401k is the most appropriate thing for you. And that's because Roth IRA withdrawals are tax-free in the future and may not be subject to a required minimum distribution.
Those first three strategies apply to retirement savings. And by the way, the spousal IRA is one of my favorite pieces of advice ever, because I think that there are a lot of people who don't realize if you have a spouse who is not earning income, you still have the ability to make a full IRA contribution for that person in their name. It's basically doubling up. So great advice there. Any advice on other areas of life?
Yeah. So now let's just talk about, in general, another strategy would be in thinking about your children. So how about college savings?
Mm-hmm.
What about making contributions to a 529? It's a tax-exempt account, may even be state tax deductible in the state that you live in. The next strategy would apply to people if you have a high deductible healthcare plan, for example. Take advantage of your HSA, the health savings account. That's an account that you can use to save and pay for healthcare expenses, and it's triple tax-free. Deductible contributions, tax-free growth, tax-free withdrawals.
Essentially, you just laid out a list of all the places that we can save, right? We can save and invest to shelter income from taxes. We're lowering our adjusted gross income and reducing our tax burden with many of them. And in the case of the Roths and the 529s and the HSAs, you get tax sheltered growth. And with the Roth and the HSA, tax-free withdrawals at the end of the road for qualified distributions.